What if everything you've been taught about money was designed to keep you working for someone else? Think about that for a moment. From the moment you entered school, you were given a formula: get good grades, go to college, find a stable job, work hard for 40 years, save a little, retire, and hope you have enough. And most people never question this formula. They follow it blindly, and they wonder why they are always stressed about money. Now imagine two children. One grows up believing that getting a good job is the safest path, that job security is the ultimate goal, that working hard for someone else is the way to succeed. The other learns that money should work harder than people, that financial freedom comes from owning assets, that the goal is not to work for money, but to have money work for you. Only one becomes financially free. Which one do you want to be? // This is not a story about a book. This is a story about two ways of thinking, two mindsets that lead to completely different lives. One mindset keeps you trapped, the other sets you free. And today, we are going to explore the mindset that makes you rich. // Introduction: why most people struggle financially. Let's start with a simple question. Why do most people struggle with money? It is not because they are lazy, it is not because they are stupid, and it is not because they do not want to succeed. It is because they were never taught how money actually works. Think about your education. How many classes did you take on personal finance? How many lessons did you have on investing, on compound interest, on building wealth? For most people, the answer is zero. Schools spend years teaching you history, science, literature, but they never teach you the one thing that affects every single day of your adult life: how to manage money. This is not an accident. The system was not designed to create millionaires. It was designed to create workers, people who show up on time, follow instructions, pay their taxes, and never ask too many questions. And as a result, millions of Americans graduate from college with degrees, with debt, and with absolutely no idea how to build wealth. They get jobs, they earn salaries, they pay bills, they buy things they cannot afford, they go into debt, they live paycheck to paycheck, and they wonder why they cannot get ahead. This is a trap, and most people never escape it. // There is a term for this. It is called a rat race. You work to earn money. You spend money to live. You work harder to earn more. You spend more because your lifestyle has grown. You are running on a treadmill that never stops. And no matter how hard you run, you never get anywhere. The problem is not how much you earn. It is what you do with what you earn. Income alone does not create wealth. It never has, and it never will. The difference between earning money and building wealth is the difference between trading your time for money and having money work for you. Most people never understand this difference. And that is why most people never become wealthy. // Let me give you an example. Imagine two people, both earn exactly $100,000 a year. The first person spends $95,000 on a big house, a nice car, fancy dinners, vacations, and they invest the remaining $5,000. The second person spends $50,000 on a modest house, a reliable car, simple meals, and they invest $50,000. After 10 years, the first person has saved $50,000 plus some investment returns. The second person has saved $500,000 plus significant investment returns. Same income, completely different outcomes. The difference is not intelligence. It is not luck, and it is not hard work. The difference is the mindset. One person understands that wealth is built by keeping money. The other believes that wealth is built by earning more. And that is the first lesson. Wealth is not about how much you make. It is about how much you keep. // Chapter 1. The two different mindsets about money. There's a story about a man who had two fathers. One father was highly educated. He had a PhD. He held a stable government job. He believed in working hard, saving money and job security. The other father was not formally educated. He dropped out of school, but he understood money. He knew how to build businesses. He knew how to invest. And he taught the man a completely different way of thinking about wealth. One father would say, study hard so you can get a good job. The other father would say, study hard so you can find good companies to buy One father would say, "The love of money is the root of all evil." The other father would say, "The lack of money is the root of all evil." One father would say, "I cannot afford it." The other father would say, "How can I afford it?" These two mindsets are the difference between poverty and wealth. // The poor and the middle class work for money. The rich have money work for them. Think about that. Most people spend their entire lives trading their time for money. They get up, go to work, do their job, collect a paycheck, and do it all over again the next day. They are exchanging their most precious resource, their time, for something that is printed every single day. The wealthy, on the other hand, understand that time is finite, and they use money to buy more time. They build systems, they invest in assets, they create businesses, and those things generate money. Even when they're not working, this is a fundamental difference. One group is dependent on their job. The other group is dependent on their assets. One group has a single source of income. The other group has multiple sources. One group is vulnerable to a single layoff. The other group is resilient. // Let me give you a modern example. Think about a typical young professional in the United States. They graduate from college with $30,000 in student loan debt. They get a job paying $60,000 a year. They rent an apartment. They buy a car. They go out to eat. They take vacations. They are living the American dream. But here's the problem. They are also living paycheck to paycheck. They have no savings. They have no investments. They are one emergency away from financial disaster. Now think about someone who has a different mindset. They also graduate with student loans. They also get a job, but they live like a college student for a few more years. They save and invest a significant portion of their income. They build an emergency fund. They start investing in index funds. They learn about real estate. After 10 years, the first person is still living paycheck to paycheck. They have a better apartment, a nicer car, but the same level of financial stress. The second person has built significant wealth. They have investments. They have passive income. They have options. Same starting point. Completely different outcomes. The difference is the mindset. // Chapter 2. Why the Rich Buy Assets. Here is one of the most important concepts you will ever learn. The difference between assets and liabilities. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket. This is not a complicated concept, but most people misunderstand it. The rich focus on acquiring assets. The middle class and poor focus on acquiring liabilities, and they call them assets. Let me give you an example. When most people buy a house, they call it an asset, but if you have a mortgage, property taxes, maintenance costs, and insurance, that house is taking money out of your pocket every single month. That is not an asset. That is a liability. Now, if you buy a rental property that generates positive cash flow, that is an asset because it puts money in your pocket. The same is true for cars, for electronics, for clothes. For most people, these are liabilities. They take money out of their pocket. They depreciate in value, and they never generate income. But the wealthy understand this. They do not buy things that drain their finances. They buy things that feed their finances. // This is why the wealthy keep getting wealthier. They take their income and they invest it in assets. Those assets generate more income. They invest that income in more assets. And the cycle continues. The poor and the middle class do the opposite. They earn income and they spend on liabilities. Those liabilities drain their income. They have less money to invest. And the cycle continues in the opposite direction. This is the cash flow pattern that determines your financial future. If your money is flowing into assets, you are building wealth. If your money is flowing into liabilities, you are destroying wealth. // Let me give you a real-world example. Think about a person who buys a rental property. They put down 20%. They rent it out. The rent covers a mortgage. The property appreciates over time. And after 30 years, they own a property worth $500,000 that has been generating income for 3 decades. That is the power of assets. Now think about a person who buys a new car every 5 years. They finance it, they pay interest, the car depreciates. After 30 years, they have bought 6 cars, and they have nothing to show for it. One person built wealth, the other person built debt. The difference is understanding the difference between assets and liabilities. // Chapter 3. Why most people buy liabilities thinking they are assets. There's a reason most people buy liabilities thinking they are assets. It is because society has told them that certain things are assets. Your house is your biggest asset, they say. But if your house is taking money out of your pocket every month, it is not an asset. It is a liability. Your car is an asset, they say. But if your car is depreciating in value and costing you money every month, it is not an asset. It is a liability. Your 401k is your retirement asset, they say. But if you do not understand what is invested in and you are paying high fees, it may not be the asset you think it is. The wealthy are not fooled by these labels. They look at the cash flow. If something puts money in their pocket, it is an asset. If something takes money out, it is a liability. // Let me give you an example from the modern world. Think about a young professional in their 20s. They get their first job. They want to look successful, so they buy a nice car. They finance it with a loan. They pay $500 a month. They pay for insurance, maintenance, gas. That car is not an asset. It is a liability. It is taking money out of their pocket every single month. Now imagine they took that $500 a month and invested it in an index fund. Over 40 years, at the historical market average, that $500 a month would grow to over $3 million. $3 million. Or a car that is worth nothing in 10 years. That is the cost of buying liabilities. // This is not about deprivation. It is about understanding the difference. You can buy a car, but understand that it is a liability. It is going to cost you money, and if you're going to buy one that is reliable, affordable, and does not drain your financial future. The wealthy do not buy things to look rich. They buy things that make them rich. They understand that looking rich is not the same as being rich, and they are not willing to sacrifice their financial future for a temporary appearance of success. // Chapter 4. Money should work for you. There's a fundamental shift that happens when you understand this concept. The shift from working for money to having money work for you. Most people are taught to work for money. They trade their time, their energy, their creativity for a paycheck, and when they stop working, the money stops coming. This is a definition of being dependent on your job. The wealthy do something different. They build assets that generate income, and they do not have to work for that income. This is called passive income, and it is the key to financial freedom. // Let me give you an example. Think about a business owner. They build a business. It generates profit, even when they are not in the office. The business continues to generate income. Think about a real estate investor. They buy rental properties. The tenants pay rent, even when the investor is on vacation. The income continues. Think about a dividend investor. They buy stocks that pay dividends. The dividends are deposited into their account. Even when they are not working, the income continues. This is the power of having money work for you. It is not about being lazy. It is about being smart. It is about building systems that generate income without your constant involvement. // Most people never build passive income. They spend their entire lives trading their time for money, and they wonder why they are always tired, always stressed, always worried about money. The wealthy understand that time is their most valuable asset, and they use their time to build systems that will continue to generate income, even when they are not working. This is a fundamental difference. One group is building a life of dependence. The other group is building a life of freedom. // Let me give you a modern example. Think about the gig economy. People are working multiple jobs, driving for Uber, delivering for DoorDash, doing freelance work. They are making money, but they are still trading their time for money. They are still dependent on their own effort. Now think about someone who takes that extra income and invests it in index funds, in real estate, in a side business. They are moving from trading time for money to having money work for them. It is a small shift in behavior, but it is a massive shift in outcome. // Chapter 5, The Cash Flow Mindset. There's a concept called cash flow. It is the movement of money in and out of your life. The wealthy focus on cash flow. They want money flowing into their pocket. They want assets generating income. They want passive income streams. The poor and middle class focus on income. They want a high salary. They want a big paycheck. They want to earn more money. But income is not the same as cash flow. You can have a high income and still have negative cash flow. If you spend more than you earn, you can have a low income and have positive cash flow. If you spend less than you earn and invest the difference. The wealthy understand this. They know that it is not how much you make. It is how much you keep and how you put it to work. // Let me give you an example. Think about a professional athlete. They earn millions of dollars, but many of them end up bankrupt. They have a high income, but they have negative cash flow because they spend more than they earn. Now think about a teacher. They earn $70,000 a year. They live modestly. They save and invest. They build wealth over time. The athlete had a higher income. The teacher built wealth. The difference is cash flow. One person focused on earning. The other person focused on keeping and growing. // The cash flow mindset is about understanding where your money is going and making sure it is going in the right direction. Are you investing in assets that will generate income, or are you spending on liabilities that will drain your income? Are you building passive income streams, or are you dependent on a single source of income? Are you growing your wealth, or are you just trading time for money? These are the questions the wealthy ask themselves, and the answers determine their financial future. // Chapter 6, Escaping the Rat Race. There's a reason most people never escape the rat race. It is because they are trapped in a cycle that is almost impossible to break. You work to earn money. You spend money to live. You work harder to earn more. You spend more because your lifestyle has grown. You are on a treadmill that never stops. But here's the thing, you can escape. The way to escape is to build assets that generate enough passive income to cover your expenses. When your passive income covers your expenses, you no longer need to work for money. You are free. This is called financial independence, and it is achievable for almost anyone, but it requires a different mindset. It requires discipline, patience, and a willingness to delay gratification. // Let me give you an example. Think about someone who wants to retire early. They are not talking about waiting until they are 65. They want to retire at 45 or 50. To do that, they need to save and invest a significant portion of their income. They need to build passive income streams. They need to live below their means. This is not easy. It requires sacrifice. It means saying no to things that other people are saying yes to, but the reward is freedom. The reward is being able to wake up every morning and do what you want, not because someone else is paying you, but because you have built a life that supports you. This is the goal of the cash flow mindset. // Most people will never achieve financial independence, not because it is impossible, but because they are not willing to do what it takes. They are not willing to delay gratification. They are not willing to live below their means. They are not willing to invest consistently. And so they stay on the treadmill, running harder every year, but never getting anywhere. The wealthy understand that the short-term sacrifice is worth the long-term freedom, and they are willing to make that sacrifice. // Chapter 7, Financial Intelligence is more valuable than a high salary. Here is something that might surprise you. Financial intelligence is more valuable than a high salary. You can earn $1 million a year, and if you do not know how to manage money, you will still end up broke. You can earn $50,000 a year, and if you are financially intelligent, you can build significant wealth. The difference is not income, it is knowledge. The wealthy understand that financial education is essential. They read books, they study investing, they learn about taxes, they understand how money works, and that knowledge allows them to make better decisions. // Let me give you an example. Think about two people. Both earn $100,000 a year. One person puts their money in a savings account earning 1% interest. After 10 years, they have saved $100,000 plus a little bit of interest. The other person invests their money in the stock market, earning the historical average of 10% per year. After 10 years, their investments have grown to over $1 million. Same income, different knowledge, different outcome. The difference is financial intelligence. One person knew how to invest, the other person did not, and that knowledge was worth almost $1 million. The wealthy understand that financial intelligence is the most valuable asset they have. It allows them to see opportunities that others miss. It allows them to avoid mistakes that others make. It allows them to build wealth that others cannot. This is why the wealthy never stop learning. They read, they study, they seek out mentors, they attend seminars. They are constantly investing in their own education because they understand that the best investment you can make is in yourself. Chapter 8. How fear and greed control people's financial decisions. Here is something that most people do not realize. Fear and greed drive most financial decisions. When the stock market goes down, people panic. They sell their investments. They lock in their losses. They do it because they are afraid. When the stock market goes up, people get greedy. They buy more. They chase returns. They do it because they want to get rich quickly. Both fear and greed lead to bad decisions. The wealthy understand this. They have learned to control their emotions. They do not make decisions based on fear or greed. They make decisions based on logic and reason. This is why they are able to buy when everyone else is selling and sell when everyone else is buying. They are able to see beyond the emotions of the moment and make decisions that serve their long-term goals. Let me give you an example. In 2008, the stock market crashed. People were terrified. They sold everything. They said they would never invest again. The wealthy, they bought stocks at bargain prices. They bought real estate at record lows. They were not afraid. They understood that the market would recover. They understood that fear was creating opportunities. And when the market recovered, they made a fortune. The people who sold lost. The people who bought won. The difference was controlling fear. The same is true for greed. When the market is going up, people get greedy. They want to make more money. They take unnecessary risks. They invest money they cannot afford to lose. The wealthy, they are cautious. They take profits. They protect their gains. They do not let greed cloud their judgment. The wealthy understand that greed is just as dangerous as fear, and they have learned to control both. Chapter 9. Why entrepreneurs think differently. Entrepreneurs think differently about money. They see opportunities where others see problems. They see solutions where others see obstacles. They see potential where others see nothing. This mindset is the key to building wealth. The wealthy understand that you cannot build wealth by working for someone else. You must own something. You must build something. You must create something of value. This is not about starting a billion-dollar company. It is about creating something that generates income. It could be a side business. It could be a rental property. It could be an online course. The key is to own something that generates income without your constant involvement. Let me give you an example. Think about a person who works at a job. They earn $100,000 a year. They're good at their job. Now think about a person who owns a small business. The business generates $100,000 a year in profit. The person with a job has to work 40 hours a week to earn that money. The person with a business can take a vacation, and the business still generates income. The difference is ownership. One person is an employee. The other person is an owner. The employee has a ceiling on their income. The owner does not. Entrepreneurs also understand the power of leverage. They use other people's time, other people's money, other people's resources to build their businesses. They are not limited by their own effort. This is how they build wealth faster than employees. They are not working harder. They are working smarter. They are building systems that generate income. instead of just trading time for money. Chapter 10. Building multiple income streams. Here is one of the most important principles of wealth building. Do not rely on a single source of income. The wealthy have multiple income streams. They have income from their job, income from investments, income from rental properties, income from businesses, income from royalties. They are not dependent on any single source. If one source dries up, they have others to fall back on. // Let me give you an example. Think about a person who has a job. They earn $100,000 a year. They have no other income. If they lose their job, their income drops to zero. Now think about a person who has a job, earns $100,000, has a rental property that generates $20,000, has investments that generate $15,000, and has a side business that generates $10,000. If they lose their job, they still have $45,000 in income. They are not dependent on a single source. The wealthy understand that multiple income streams create security. They create options. They create freedom. // Building multiple income streams is not as difficult as it seems. You can start small. You can invest in index funds. You can buy a rental property. You can start a side business. You can create a digital product. The key is to start and to keep building. Every new income stream adds to your security, adds to your freedom, adds to your wealth. Most people never start. They rely on a single source of income, and they hope nothing goes wrong. But hope is not a strategy. Building multiple income streams is a strategy. Chapter 11. The psychology of wealth. There is psychology to wealth that most people do not understand. Wealthy people think differently. They believe differently. They behave differently. And it is these differences that create their wealth. First, wealthy people believe that they are responsible for their financial situation. They do not blame the economy. They do not blame their boss. They do not blame bad luck. They take responsibility and they take action. Second, wealthy people believe that they can learn anything. They are not limited by their current knowledge. They believe that they can learn about investing, about real estate, about business, and because they believe they can learn, they do learn. Third, wealthy people believe that wealth is not a zero-sum game. They believe that there is enough wealth for everyone, that they can create wealth without taking it from others. This abundance mindset allows them to see opportunities that others miss. Fourth, wealthy people believe that failure is part of success. This is the lesson. Building wealth is not about getting rich quickly. It is about building a long-term mindset. It is about saving, investing, learning, growing consistently over decades. It is about discipline, patience, and commitment. It is about understanding that the slow path is the fast path, and the fast path usually leads to disaster. The wealthy understand this, and that is why they stay wealthy. // Ending. The mindset that makes you rich. So here is the truth. The difference between the rich and everyone else is not income, it is not intelligence, and it is not luck. The difference is the mindset. The wealthy think differently, they act differently, they build their lives differently, and that is why they achieve different results. You can learn this mindset. You can develop this mindset. You can build this mindset. It starts with understanding the difference between assets and liabilities. It continues with focusing on cash flow, building passive income, and escaping the rat race. And it requires discipline, patience, and a long-term perspective. // The richest investment you will ever make is not in stocks, real estate, or business. It is in the way you think. Because before you become rich in your bank account, you must become rich in your mind. That is the mindset that makes you rich, and it is available to anyone who is willing to learn. // If this audiobook changed the way you think about money, share it with someone who is ready to break free from the rat race. Subscribe for more timeless lessons on wealth, mindset, and financial freedom, because the path to wealth begins with a single step, and the best time to take that step is right now. // Go! Build the mindset that makes you rich. Your financial freedom is waiting.